What's up, guys? It's Shannon Straight Ministries, and my good friend Soul.
Hi.
However do however do you want it? However, for those of you that aren't '90s fans, you don't get the Soul for Real reference. So, Soul and I had a bit of technical difficulties, but I think the good thing about this is it gives us an opportunity to kind of talk to people that we wouldn't normally talk to. And as ministry supporters, like, my goal is to try to connect people and, bring resources around. So Soul was gracious enough to agree to talk to us today about capital management, capital raise, capital keep, capital spend, and your fiduciary responsibility as a business owner. Particularly as I go from church to church over the last few months. I spoke at a conference last month, and Soul probably didn't know this, but some of the things that they talked about after the conference, all the questions I got were in regards to how do I raise money? And then, when I talked to church owners, it was, or church leaders, because I guess nobody owns a church. It was more of how do I keep money and what should I be doing? So, you want to tell us a little bit about yourself?
Sure. For the last 15 years or so, basically since I graduated from school, I've been working as a director of operations for a hedge fund, mid-sized fund out in New York that manages around 750 million. It's all alternative investments. We're in the distressed space, special situations, hard money lender type. And I've pretty much done everything non-investment related in terms of running the fund since the inception. So accounting, finance, technology, compliance.
No, you want to tell some of those folks that don't know what a hedge fund is, what a hedge fund is, because I think people think they know, but they really don't know. I think a lot of times they think it's like this mystery opportunity that money just kind of falls out the sky. But
and I'm sure what you hear in the news doesn't help. It's, in a nutshell, it's a group of either personal or institutional investors that are pooling their money. So, similar to personal investments, it's just more at the institutional level. And I guess in the last 5 to 7 years has probably just been the target of a lot of bad press. It's not all evil. It's not all fictitious money. I mean, I can tell you, having started from a base of 25 million, that was our founders, friends and family, to growing to, taking 15 years to grow to 750 million. It definitely took a lot of effort. And it didn't happen overnight. So it's certainly, and certainly not fictitious in the sense that same as I mean, we try not to be market correlated, but when you have I think in the hedge fund space, the assumption is that this is your specialization. You have money to lose, basically, whereas more public money, I think there's more skin in the game. And I think that's really the big difference, is that you're dealing with sophisticated investors versus John Doe on the street, someone that really isn't familiar with investments. So you're trusting your money someone that does this all day, every day.
now, for a guy like me that has spent the last 15 years in the credit space, so doing everything from consumer finance to commercial, and the last few years more of like in the VC cash raise space, I think you're definitely starting to see a shift in the marketplace, right? Particularly as you talk about, the fintech space and, this whole peer-to-peer lender methodology with, some of like the upstarts or even like Lending Club and Prosper and guys like that, they've been heavily now over the last few years supported by hedge funds. Can you talk a bit about the cash raise strategies that you've seen over the years? And and when I say cash raise strategies, I mean from a new business coming in the game, a guy that says, "Hey, I got this great idea that I've cooked up in my garage, and I want to get some money for it."
I mean, I would say that it's getting more and more difficult to do. Um, in my space, I've primarily dealt with folks that are established. Um, they're coming to us for some sort of bridge financing. It's got to be someone who's got a track record. So we're not really dealing with a brand new startup.
What advice do you
So
have for startups as they look at raising cash? Particularly as, for the guy that says, "Hey, look, I got this great idea." What are some of the cash raise strategies you would, I mean, including bootstrap? Can you talk something about that? Because I think people, when they think about having skin in the game, a lot of times they make the decision that it's a lot easier to start a business if you don't have a lot of at stake yourself.
I mean, I think I disagree with the view that you can just start from scratch. I mean, no matter what, you should always be building some sort of track record that you should assume that people are going to look at. So they're going to look at they're going to look at your background, they're going to check your background, they're going to check your credit. They want to know that you are responsible. So lenders or any investors are going to frown upon anyone that has filed for bankruptcy. So I think you should always assume that you should be building some sort of track record that people, whether personal investors or institutions, are going to look at, and think about what you've done with money. Were you responsible? The money that you came to the table with, did you raise that on your own, or did you borrow it from your rich uncle last week? I think that is a completely different situation than someone that just spent the last 5 years saving money for this, this startup idea. I think it just shows that there's more dedication there versus, hey, I have this great idea that I came up with last week, and I borrowed some money from my rich uncle. So I think a lot of it is planning and building up a viable story that's going to stand up to whatever questions are asked.
And it's interesting you talk about story, because I think when I look at times that I've spent over the last few years in the startup space, as we meet with VC firms or hedge funds, it's all about that story you're able to tell. We would always have the joke that if you have a great deck, a great deck could get you $5 million. But on the flip side, if you have a horrible deck, but you have and even if you have a great story, I think the presentation of it is what draws investors in, because they're able to kind of tie that idea to something tangible, whether it be the person or not. So when you look at a business coming up, a guy coming up, looking to go the franchise route or something like that, a guy coming up with an idea where he needs 10 or 15 grand, a small amount of extremely small cap businesses. What advice would you have if you can give one piece of advice to that guy to say, hey, this is what you need to do to get your capital together to start your business?
I would say, for one thing, be open to the advice and suggestion of the people that you're surrounded by, rather. Because I think oftentimes, I think both in personal and business, folks aren't willing to adapt. So yeah, and sometimes it's just, you might be a little rough around the edges, or they know something you don't. Maybe there's something in the environment that perhaps you haven't considered. So I think that you have to be open um, to the opinions of the of folks that are in your environment, and also just paying attention to the environment. I mean, if you need to reinvent yourself, then you got to think fast and be nimble and figure out how to do that.
You said something about the story.
Yeah.
Can you talk quickly about the importance of telling the right story and how that story should be shaped?
Well, I think whenever you're telling any story, you have to think about your audience, think and do some research, think about what it is they're really looking for, and tailor the story. And not to be deceptive at all, but I think depending on who your audience is, they're going to focus on different points in the story.
Do you think this whole cash rate strategy differs profit versus nonprofit?
I Unfortunately, I don't have a lot of experience in the nonprofit space, but I would say it depends on what your objectives are. And I think that that's one big factor that anyone should think about whenever they're moving in any space. Really, what's your objective? And that should drive, um, how you're going to attack things. So I'm sure it's completely different in the nonprofit world than it is in the profit world. Um, where more people I'm sure in the nonprofit world, I think everyone's focused on expenses, but I think you're probably more focused on the expenses on the nonprofit side.
Yeah, I mean, I think as one that's kind of dabbled and spent the bulk of my time in the for-profit space, and now I'm in the nonprofit space. I think one thing that people miss is the fact that in the nonprofit side, I think it's crucial. It is of the highest degree of importance that you tell some type of story, that you paint some type of picture, because what you're relying on is you're relying on the goodwill and the benevolence of others to help kind of fund that vision. But I think as far as fiduciary responsibility goes, I mean, I think you are still held responsible. And I think we'll talk about failures in a minute. I think one of the biggest failures that we see on the nonprofit side is the tricking off of cash, for lack of a better word. I don't know, educators, if that's a proper term to use, tricking off, but I think you see a lot of that in the for-profit space where I was involved with a number of startups where we just kind of blow through cash with that idea that you want people to think that you've already made it, when you guess what, you haven't gotten anywhere near where you need to be.
Fake it till you make it.
Yeah, and I think we talked about that in a personal conversation not too long ago, where you talked about the importance of the transition of being on hedge fund row in New York, and you look a lot of you kind of look at a lot of those organizations, and I think everybody wants to present themselves as the Goldman Sachs of the world, when it's tough when you don't have one viable product on the street yet.
Right, but I think regardless whether on the profit side you're answering to investors or lenders, and the nonprofit you're looking at folks that are going to donate some type of money, you are absolutely accountable. I mean, they give you money, they're going to ask you all the time, what are you doing with my money?
Yeah.
and there always has to be a responsible answer, because whatever you're spending, I mean, they're certainly focused on what's the expense ratio. And I mean, so much so that they look at the individual items that make up that expense ratio. So if the expense ratio is even above, I would say 1%. I think we were at 0.5%, and some folks would tell us that was too high. And and the money you're spending, well, what's the source of it? And so a lot of our expenses would come from asset management fees versus actual capital. um, because one of our big focuses was preserving capital. So.
Now, when you talk about expense ratio, touch on that quickly, just to let people know exactly what you mean by that, because I can kind of help tie that into the nonprofit side for a lot of my nonprofit watchers.
Well, when you're talking about a fund, you're really talking about all of the major expenses, I would say, really it takes to manage a fund. So you're looking at your asset management fees, you're looking at audit fees, the accountants that are running the audits. You're looking at lawyers. How much are they spending, on legal fees? Are those legal fees just related to counsel, or is it some sort of liability? Those are probably the biggest line items for us. And like I said, you really want to keep it below. We were hovering around 0.5%, and some would say that was too high.
That's 0.5% of revenue, right?
0.5% of assets under management.
Gotcha. Okay. So for those of you that are watching,
revenue, yes.
So for those of you that are watching from a nonprofit perspective, I mean, those, particularly speaking to like my ministry colleagues, that's things like, ministry mailings and correspondence fees, things that are, somewhat outside of payroll, but things that kind of drive your day-to-day engine. What I'm starting to see with a lot of people in the ministry perspective is that, knowing, and Sol talked about this, about knowing your audience. For a lot of us, when we look at, churches particularly that have these, large arenas that they're, not filling to a perspective every day or every month, looking at alternate uses for those facilities, but also looking at how you communicate with your supporters. For those of you that run a small ministry that, deals with, postage and things of that nature, to get out mailings to your people all in, including postage, you can be talking about 60 cents an item. Well, you send out 10,000 of those, that's, $6,000 a month.
Right.
And if you're only making $100,000 a month, that's, you make $100,000 a month, that's 6% of your total revenue on something small like that.
Mm-hmm. And I think donors are really looking, what they want to know is, bottom line is, the money that I'm giving you as a donation, is it making it to the cause that you're asking me to give? And so even I do, just looking at small, on a personal level, the small amounts of donations that I make, I want to know that, the majority of the money that I'm donating is actually going to the cause. I don't want to hear that cents on the dollar that I'm giving is actually going towards expenses, and I really don't want to hear that it's going to the CEO's salary.
It was interesting. I was meeting with a pastor this morning.
The homeless, or whatever the cause is supposed to be.
I was meeting with a pastor this morning, and we were talking about it, and he was like, we were talking about just, as one that I run a ministry that we talk about finances, about, the importance of just managing that on a day-to-day, because, what I'm starting to see just from a finance perspective is that in the last 7 years, church foreclosures have increased like 90%.
Mm-hmm.
And that's unheard of, because, and I've talked to churches about this, and those of you that are watching that kind of, run a church or oversee a church, when you start looking at church buildings and things like that, those are things, churches have become asset insolvent because they've purchased buildings that are specified as single-use church facilities. Well, guess what? When it comes time to upgrade or to get a larger facility or to even refinance a facility, you've depreciated the value of that facility, because that facility can only be used for one thing. If you have a church, and guess what? You bought a church, and your church may be worth $3 million on paper, but in reality, it's only worth $1.7 million, because that's all a person can get financed for that's going to buy it.
Mm-hmm.
So, it's being aware of kind of, Sol and I talked about this, offline, is kind of growing into, faking it till you making it, but also growing into to where you can wear the larger pants. You know, you don't go buy a 20,000 square foot facility when 3,000 square foot will suffice. I mean, I've worked for companies like that where, you know, right off the gate, we've had a ton of Series A money where we're like, hey, let's go buy this facility and let's go put our name on the building and let's, you know, fill it up with all this outlandish stuff. And then, you know, one day the investor comes calling, and they come calling like this saying, where's my money? What have you done with my money?
Exactly.
And it's not their money until it's time for you to give it back.
Yeah. You know, now that you're saying that, there are some things that I guess I used to think seemed off the wall, and now that you're speaking about you know, churches and what they do with their money, and you should really buy a space that is multi-purpose. The CrossFit gym that I belong to is actually run by a church. It's in a warehouse, and I long before I used to really think about it from the business perspective. I was like, you know, why are all these churches popping up in all these industrial warehouse spaces? And you know, they do a big portion of that space is used for something other than the church. They may have, you know, a designated area for, you know, where the service is going to be is going to be held. You know, they may rent the entire top floor to, you know, a completely different business. And so now that picture's starting to come together, that, you know, you're trying to do, you know, you're just adapting and getting ready to do whatever it is you need to do to survive, basically, or, you know, whatever the next thing, if you should have to sell it, or, you know, if income isn't, you know, what you thought it was going to be, you know, hey, you have this this other side thing that could help with the bottom line.
Well, and I think also, you know, to Sol's point, it's about augmenting the or supplementing the use of your assets for income earning potential. You know, I got a buddy, the guy that I met with today, they oversee a church in Santa Ana, and he won't mind me saying this, and the church is literally downtown in a gentrified area of Santa Ana. Now, Sol's from New York, so you know, I think they've probably done that with Harlem, right? They've gentrified Harlem, where,
Oh, absolutely.
you know, and so, you know, when I was talking to him today, and he said he's in a theater, and the theater is like, you know, 3 stories, and it was interesting because he says, now he's from Tennessee, so he's kind of country sounding, and he was like, man, look, they're not doing anything with the place on a Sunday anyway. So he was like, it
Right.
was great for us. They were like, hey, yeah, great, rent out this space.
Yeah.
And, you know, churches kind of look at them sideways, but guess where they're at? They're in the heart of the city. They're on like a major walk of the city. There's people walking by the facility every day. They're increasing week over week in numbers just because they're there and people see them there. So if people are out having brunch on a Sunday morning and they're like, well, hey, we would like to go to a church. Oh, guess what? There's a church right there we just passed.
Right.
And so they've done a number of things. They've kept their overhead extremely low. They've kind of put themselves in a place where there's the greatest degree of need and the greatest degree of foot traffic. Even though they're in a non-traditional space, the non-traditional space serves them well because the people that won't drive 20 minutes to go to a traditional church facility will go there because they're there. So for business owners, as you form your vision and kind of put the things together, because all of us have a dream, right? And, you know, as you start putting the pieces of the puzzle together, I think Sol said this, you know, be nimble as to how you're going to do things. Be open, be flexible. You know, even what I do now, you know, I'm talking to people now about this kind of stuff, and it's completely separate than going to talking to a church on a Sunday. You know, so, you know, as we wrap this up, you know, let me ask you this: what's some of the biggest failures you've seen from these new emerging companies and how they handle their resources?
I would say probably just mismanagement. You know, starting, you know, I think we spoke about this earlier. You have to have a clear objective and not just come up with the objective, actually follow it. You know, and you know, that could be something that could be dangerous when we're talking about places that have to be multifunctional and multi-use, because it's also sort of easy to lose your way. Um, and I think that we probably saw that when, everyone was saying diversify, 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 and they diversified out of their core values. And so I think they really need to, just come up with objectives, stick to them. And I think one of the other biggest mistakes is just growing too fast. I mean, I'm sure we'd all like to be the next Bill Gates, but is that going to happen overnight? So, it's a balance in finding, I would say, you know, prepare to grow into the next phase, but also, have a backup plan or two in case that doesn't work out, and reinvent yourself if you have to, because the environment is constantly changing.
Interesting. And that, so that kind of, plays into the faith-based or the nonprofit aspect. For those of you that run ministries or faith-based organizations, don't be afraid to reinvent yourself. And I'm not talking about reinventing your core values and what you believe from a doctrinal perspective, but reinvent yourself from a presentation perspective. I think the Apostle Paul talked about being all things to all men that you may win some. It's extremely important to be able to touch those outside of your immediate circle of people that you're touching. And I think, when we start looking at a lot of these businesses, I mean, I've worked for organizations where, we were driven by leadership, where the leadership had 1,000 different ideas. And was, every week it was, let's do this, let's do that, let's do this, let's do that. And we'd be like, let's do one thing well.
Yes,
and figure out what
do that one thing well.
And get that done first.
Mm-hmm. Absolutely. I mean, and sometimes the way you're going you to where you want to be, and so I think the core value sticks. It's just the way you execute it that should change. So it's not that the core value should change. It's just the way you go about it. Unless, you've tried and tried and tried and, come to the conclusion that perhaps this idea may not work. But I would say that is the absolute last resort.
All right. Now, as we wrap this up, so as you look at small businesses, then, give us your, 30-second elevator approach on, hey, I got this business. I want to get started today, but I'm scared. I think you probably subscribe to the same thing that I prescribe to. If you only have one stream of income, that's going to be, you're extremely vulnerable because you're at the mercy of that person in which you work for. But, huh? Give me your thought, your 30-second of, wind down of, hey, you're a new business, you got a plan, you got an idea. This is what I'm going to tell you to do to get it started.
Well, I would say, I hope up until this point, I hope you planned ahead. You built yourself some cushion, but don't be afraid to take that leap of faith and, ultimately believe in yourself, and, just try again. Because tomorrow even if you're struggling today, tomorrow's a new day, and, you may figure out, hey, I just need to tweak slightly. Tomorrow's a new day to try that tweak. So, um, and outside of that, I would just say, just keep reading, make sure that uh, that you read the environments and the resources that are out there. I mean, there's so much free content now, and you don't have to go to the library to get to that information anymore. Um, and just look for, like I said, keep the core objectives and values that you came up with. But just look at how you're actually executing things, and always sit back and reevaluate and figure out if things are working, or if there needs to be some sort of adjustment. And don't be afraid to make those adjustments.
Wow. Well, thank you so much, Soul, for your time. And those of you that are watching, thank you for watching. This has been fun. I mean, I think it's been good to kind of chop it up with Soul and kind of get her in-depth aspect of an insight from the mind of Soul and the mind of the hedge fund and the mind of cash waste. Now I know before I go by a ministry office and spend $45,000 on artwork, that's probably not a good idea.
Probably not.
Before I go timeshare a plane or something like that. So that's it, y'all. That's all we got. I'm Shannon. So, you want to tell people how to get in touch with you if they want to get in touch with you? I'm sure Soul will consult with you guys for a fee. Do you have a website? You have a way that you want them to hit you up? You got a YouTube channel, an Instagram, a Snapchat?
I do not have a YouTube channel just yet, but I am on Instagram. I like to take pictures of pretty things.
So if you guys decide you want to get in touch with Soul, hit us up at info@shannonstewardministries.org, and then I will get you in touch with Soul, and Soul will figure out when she's done with this sabbatical and this world tour that she is on. And when she comes back, when she goes back to New York or Puerto Rico or Australia or wherever you're going to find Soul, you will be able to get in touch with her. But until we speak again, I love you, God loves you, and keep living in victory.